Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Alconin, along with Brianna Valesky, and we have Karl Setzer on the line. He's a grain market analyst at MaxYield Grain. Karl, how you doing this morning?
I'm doing pretty good, Joel. How are you guys?
We're doing good. Thanks for coming on. What a great day to have you on here. We had some supply and demand figures come out yesterday, and let's just analyze them. Let's first start analyzing them for the soybean market. How'd the supply and demand figures look?
It came out pretty much, if any reports ever came out 100% as expected, the soybeans did it yesterday. We were looking at a 20 million bushel carryover in old crop stocks. We hit that. We dropped new crop carryout 25 million bushels. Everything there was pretty much as expected, Joel. Really no surprises. If anything, the probably more questions than answered around soybeans heading into the end of the month. In another 19 days here, we get the acreage numbers, and really the soybean report is a little bit forgot about already, and we're starting to focus a little bit on the acres. We think there might not be as the acreage number might be a little off. We already got some analysts coming out 1 million to 2.5 million acres more than we saw in the March intentions due to the wet weather across the plains and the Midwest. So that's what we got to look at there. The one number that did, if anything, on the soybeans, and this is something moving forward, we really got to look at our soy meal sales. We got some pretty heavy soy meal sales on the books here, Joel, and we've been seeing a lot of competition on South America. The South American soy meal basis is under some sharp pressure here lately, and actually it's to the point where you could pencil South American soy meal into U.S. ports in that Southeast feed market. So really the supply and demand numbers were kind of a yawner yesterday, and now we're just kind of looking at what's going to happen here in the next 2-3 weeks.
How did soybean futures react to it?
All in all, they actually held in pretty good yesterday. We had the grains fell apart. Corn really weak collapsed, and when that started heading south, corn just crumbled, went with it. Soybeans, we posted a couple cent loss here on the front month, but all in all, the soy complex did hold in there pretty good. We tried to see a bit of a rally overnight on soybeans, but without some fundamental strength right now and something to really shock that complex, it's really struggling to post gains and hold on to them. And we got to step back and look, and the old crop carryout, even though we dropped it 20 million bushels yesterday, we're at 330 for a projected carryout. While it is tighter, we got to remember we're coming off a year where we had 92 million bushels carryout. So it's, we're better than, we're almost 4 times what our carryover was last year. So it's a supportive number, and we are seeing it decline. There's still adequate stocks there, and that's going to put a long-term bearish sentiment in that soy complex probably for the next year, Joel.
All right, so it looked like the supply is exceeding demand here in the corn futures. Had a nice run up, pulled back a little bit. Don't call me a technician here, but it looks like you got about a 50% retracement of that rally, roughly 348 and change to 368 and change here, back below that level. Give us a take on the corn supply and demand figures.
The corn really on the U.S. numbers, there again, we came out pretty much as expected. We saw, a little bit of a reduction, more or less, some fine tuning to the old crop numbers here. Old crop carryout, 18 or 1.876 billion. We took it up a minimal 25 million bushels from May. New crop 1.77 billion. We took that up from 1.74, 30 million more corn there. So really there again, same as in the soy complex, we had fine tuning. What really weighed on corn, and other than the wheat complex, we got to look at the global numbers. We were expecting a drawdown in corn stocks here, and we're going to get it from a global point of view, but it's only 2 million metric tons. That's really not that much. Carry-on stocks, USDA, took them up 6.5 million metric tons. So we're going to see a lot of corn carried over from this year to next. The thing is, we got to look at where the USDA found this corn from. 12 million metric tons in China. They increased China's crop, and they also took the Brazilian production up 3 million metric tons. With some weather issues starting to develop in China right now, I'm not going to totally say that you can't disagree with the USDA, Joel. The road to the poorhouse is lined with traders that have done that. But I'm going to tell you, that number seems a little bit suspect to me, all things considered. The Brazilian one, yes, I believe that. I think they're up 3 million metric tons. I can write that down. The Chinese one and everything, I got to look at them with a little bit of skepticism there, Joel.
Okay, all right. I like that. A lot of people went broke fading those reports. Reminds me of trading places there when what was it? The OJ futures is always brought up. Then lastly, let's talk about wheat here. You said that the numbers for wheat perhaps pulled down the corn. I can bring up the wheat ETF here. Boy, now that's had a nice run. Now the pullback here, I'm looking at the wheat ETF, pretty significant here though. Looks like it's at least on the wheat ETF here. Seems like it's coming into support. Give me your take on the supply and demand figures in the wheat complex.
Looking at the wheat, and I'm not an expert in the wheat, Joel, but numbers are numbers. You look at, the winter production, those were thrown out yesterday, 1.5 billion, versus 1.47 in May. Hard wheat coming in at 888 versus 853 in May. And soft wheat, the soft red, we took a little bit of a hit there, 414 versus 416. So we have seen, the wheat's getting, a little bit thrown around there, but the thing is, we got total U.S. wheat production 2.12 billion bushels. It's still a sizable crop. The thing is, we can't get rid of it. Nobody's really looking for our wheat right now. You look at the carryout numbers on it, and we're sitting at the number yesterday, 712 million bushels of carryout. June numbers for new crop, 814 million bushel carryout. We took it up 21 million bushels. That's a 37.7% stocks to use. Joel, it's just hard to get a complex to rally when you've got that large of a supply sitting, in the terminals. And you look at, the USDA increased again, took Russian wheat production up 1.5 million metric tons, took the Ukraine crop up 1, left Australian unchanged, but we took the world wheat feeding down 3 million metric tons. So the demand had slipped a little bit there. But one correlation we got to look at is, you got to trade the spread and look at the spread, July corn versus July wheat. When we got July corn sitting at 355, and you got July wheat trading in that 506, 507 mark, there's a tendency that wheat corn spread holds around that $1.35, $1.40 mark. The simple fact, corn is walking down. It's going to bring wheat down with it.
Okay, let's just talk about the supply and demand, the figures. Those are always important, but another thing, and you mentioned it over in China, and is the weather. I got my sprinklers turned on. I'm turning them off. We're getting all kinds of rain here. Is the weather going to have any impact on the complex moving up here in the next couple months?
It will, and I'll tell you, Joel, if you need some water, us guys out here in the Western Belt would be more than happy to send it your way. We got rains coming through Iowa here. You get on that, southwest Iowa, Missouri area down there. We're going to see some unplanted acres on there. Them crops are, it's wet. It's going to remain wet. We got more rain coming through basically for the next week. We got chances. Thing is, what we got to look at is every year in the United States, we have a region that is affected by excessive moisture. Unfortunately, it's that region's, they're getting it this year. There are dry areas, but what we're really looking at and what I'm really starting to monitor, and the drought map came out this morning and showed some improvement in it, but you got to look in the southeastern United States, forecast indicating some above normal temperatures down there. We've already got abnormally dry soils. I'm not going to say it's a drought, but it's dry. And that tends to be a lot of our significant droughts can build down there and start to expand. And within as little as 2 weeks here, that corn's going to start to pollinate, Joel. So we're starting to get into a critical area there. I think the next 10 days, 2 weeks, what we see for weather down there could send a little bit of a shock in the market. You've got funds sitting heavily short, 167,000 on corn, 99,000 on soybeans, 78,000 on the wheat. You know, this market is ripe for a short covering bounce. And like you had said here before, Joel, you know, we had a 50% retracement in the corn. When we see them come back through, and again, I'm not a technical trader either, but when we see something like that, we got to take advantage of it in this market, because I think rallies are going to be very short-lived and they're going to be hard to come by.
Now that's so overall, you know, the weather situation in the southeast and you know down in the western, probably not enough to overdo the abundance of supply that's out there. Or are you saying the next 10 days to 2 weeks could be pretty critical?
I think next, if we're going to see a rally that's going to turn this a little bit, the next 10 days to 2 weeks is coming from a weather point of view is probably where we're going to have to start to get it from. Looking at the simple supply and demand numbers, there's not enough there to get a rally. We got to watch the financial markets a little bit and see what happens with the value of this U.S. dollar. If we can get that dollar to back off a little bit, it's going to bring some financial investors and a few speculators back into the commodities, hopefully. And that is what we really need to get this market to turn around, is just some money inflow, and we're not getting that right now, Joel.
Okay, all right. We've been on the line with Karl Setzer. He is a grain market analyst at MaxYieldGrain.com, discussing the supply and demand figures that were out yesterday. Talking technical, even though you say you're not a technician, Karl, I think you sound pretty good to me. And then you're talking about the weather. So we got a lot of things to keep on in the grain complex. Thanks for coming on. Enjoy getting an update on the commodities. We don't talk about them enough, and we'll have you on again soon.
Absolutely. I appreciate it. Thank you, Joel.